Hey guys, this is Tagene Brown-McBean of Money Coaching Services, and today we're gonna talk about 7 different types of income. That's right, 7 different types of income. But before we get into the details, I'd like you to hit subscribe, hit the notification so that you know when we are on, and I want you to browse what's in the description, because there are some helpful training in the description that can help you manage your money. So let's get into the details. So one type of income is earned income. Yes, most people are aware of earned income. That's when you go to a job and you get paid for work that you do, right? And this is what most people experience. They go to school, then they get a job, and that job pays them earned income. So when they work, they get paid. So a lot of people don't realize that there are other ways of also earning income. So here is another one, number 2. Profit income. Now, profit income is like when you have a business and you're selling goods and services to get a profit. So when you purchase your goods, say from a supplier, you put your markup on it and your selling price would be higher. And what you get as the difference between the cost price and the selling price, that would be your profit income. All right, number 3 is interest income. Buying government stock is a safe way to generate interest income, right? There are other ways, but nowadays putting your money in the bank to earn interest is not such a good idea because the interest rates are so low. In Jamaica, the interest rate on a savings account is like 0.01%. Now, who wants that for their money? Less than 1%? That doesn't make any sense. So, buying something like a government bond would give you a higher interest rate, right? And that is money that is considered to be safe because the government is the one that has the bonds, right? Okay, so number 4 is dividend income. So what is dividends? Dividends comes from if you have bought stocks or shares in a company on the stock exchange, and the company has met with their directors and they say, okay, for this year, because not every company gives dividends every year, they usually have a meeting and the directors decide when they're going to give dividends, and they tell you based on how much shares you have, whatever, how much you will get for the dividends. So they will decide, and then they will give you a time frame as to when the dividends will be paid out. So this is as a result of you buying a stock on the stock market, and you have shares with a company that has announced dividend payments to be made. So that is how you get your dividend income, right? From purchasing stocks that pay dividends. All right, so number 5 is rental income. Now number 5 is, what should I say, you can have rental income for real estate, meaning you have an apartment that you rent. Some people, they rent half side of their house They set up the other side so that it has a bedroom, a bathroom, and probably a kitchenette and a wash area, and then they rent that side of the house. While other people, they go as far as to have a separate apartment or building that they rent to others to earn rental income. Now this is residential, but you can also have rental income for commercial space. Like if you buy a building and you're renting it out to business owners, so the business owners are going to set up shop in that space and you charge them rental income for them to use this space to run their business. So you have different types of rental income. It can be commercial rental and it can be residential rental. Okay, all right, but there can be challenges with the rental income. Ensure that if for any reason your tenants cannot pay you, you have the resources to be able to pay any mortgages that is attached to that property. Because what some people do, they go and they get a mortgage from the bank and say, okay, I'm going to rent the property, and the people are basically the rent that is collected for rental income, that is what they would use to pay the mortgage. But the safest way to do it is to ensure that you can afford the mortgage to be paid in case anything happens to your renters, that you will still have a good relationship with your banker and that your mortgage still gets paid. So keep in mind that you should not be depending on your renter 100% to be able to pay any mortgages attached to any rental property that you have. All right, number 6, capital gain. Yes, capital gain is when you buy something. Well, I'm going to tell you more in the financial sense. Some persons, when they see a stock being issued on the stock market for the first time, it's called the IPO, initial public offer, right? And what that means is that this is the first time this company is issuing stocks to the public for persons to purchase. Now, because in the initial offer, the price for the shares are generally low, or some people would say quote unquote reasonable, what some people do, they go to the bank and say, bank, can you lend me $1 million or $2 million, and I'm gonna purchase some stocks, right? So they take the loan, they buy the stocks, then they hold the stocks for a while until they've made back more than the principal. Okay, so they have made back more than the $1 million that they borrowed, or made back more than the $2 million that they borrowed, and after which point now they sell those shares. They go back to the bank and say, bank, thank you for lending me this loan. Here is your $1 million back, or your $2 million back, and the difference is the capital gain, which means if after buying those shares and selling it, he bought it for $1 million and he made another $1 million, which is two, he made it came up to $2 million. What that means, he gives the bank back their $1 million and he has $1 million. So that is a capital gain. So it's the difference between you purchasing something at a low price and then selling it back at a higher price. And this can also be done with businesses. Some people find businesses that are struggling purchase it for a low rate, fix up the business, and then resell that business to another company for a higher price, because now the business has certain efficiencies now running, meaning they're operating better, they're earning more. But the intention was not to keep the business. The intention was to get a business not functioning properly, fix it up, and then sell it back for a higher price. And also it goes the same way like when people buy houses that are old, fix them up, and then sell them back. So you're basically flipping the business. And you can also flip a house or an apartment. So that method is called capital gain. You invest in a small amount to sell back that same building or property or stock or share as soon as it starts making a profit for you. So the difference in that is capital gain. So that's capital gain income. All right, so the final one is royalty income. Now, what is royalty income? Royalty income is income that has been generated from something that someone has created. So say for example, you have a record company, right, and you assign people to your record label and so on. So the thing about it, in order for them to use your name or any association with you, they would be charged to use your material, and that charge is called royalty, right? So you're charging them to use your brand, your business name, your material that you have created, your books, anything that has a copyright on it. You can charge persons to use it, and that is called royalty income. Now, if you have any other income that we have not mentioned in this, you can put it in the comments so persons can learn other ways how to make more income. So we have given you 7 different types. You can also put any other type of income in the comments. And if you have more time, you can watch or listen to some more of our videos. Thank you for joining us today. This is Tagene Brown-McBean of Money Coaching Services. Bye.